How do experts analyze historical inflation data? Have you ever wondered how experts make sense of historical inflation data? It is a fascinating process that combines various methods and tools to understand price changes over time. Let's break it down. First, experts gather reliable inflation measures. These include the Consumer Price Index, the Producer Price Index, and the Gross Domestic Product Deflator. These measures reflected how prices have changed over time and serve as the foundation for analysis. A common approach is to look at past inflation values. Inflation tends to be persistent, meaning that trends can often continue. For instance, experts use regression analysis to predict future inflation based on past rates. This method helps them estimate how inflation might look 1 year ahead by examining historical trends. Another simpler method is known as a naive forecast. This assumes that future inflation will be similar to what has happened recently. For example, if inflation grew at a certain rate over the last 4 quarters, experts might predict that it will continue at that rate. More advanced techniques come into play with models like the Autoregressive Integrated Moving Average. These models analyze inflation data patterns over time, capturing trends and cycles. Some experts also include other economic indicators, such as wage growth or core inflation, which excludes volatile food and energy prices. This helps improve the accuracy of their predictions. Experts often compare different forecasting methods, some relying on economic theories like the Phillips curve, which connects inflation to unemployment. However, research shows that statistical models can perform just as well or even better during certain periods. In addition to historical data, analysts look at forward-looking measures. These include inflation expectations from surveys or market indicators like inflation break-even rates. These measures provide insight into how consumers and investors view future inflation. When analyzing historical inflation, experts pay close attention to how inflation rates are measured. They might use trimmed mean methods to exclude extreme price changes, giving a clearer picture of underlying trends. They also look at inflation over various time frames, such as monthly or yearly averages, to spot shifts in behavior. The practical applications of this analysis are significant. It helps guide monetary policy decisions, adjust wages, and inform investment strategies. By understanding historical inflation patterns, central banks and policymakers can anticipate inflationary pressures and take appropriate actions. In summary, experts analyze historical inflation data by using statistical models based on past rates, incorporating related economic indicators, and carefully selecting measurement techniques. This comprehensive approach provides a detailed view of inflation dynamics throughout financial history.